Hi, this is Hyperwave. I am Leah Wald here with Tyler Jenks. As usual, we have missed you guys. Today we're going to talk about what's going on with Bitcoin price action. There's a lot of FUD. And we're also maybe going to look at what's happening with some of the alts in reaction as well. And a small announcement that we're super excited about is Safeting is going to be on Friday with Tyler and I. So it's going to really be like a nice fireside chat. Safe is absolutely incredible. Again, couldn't recommend more. And also important to this conversation is his interview recently with the Mises Institute that recently took place. Absolutely incredible, in alignment with our latest video about gold. So would recommend listening to that again. That's all I'll say for now. Fireside chat with Safe on Friday. That'll be at noon. So I'll let you guys know that one again. But without further ado, let's talk about Bitcoin. Hi, Ty.
Hello. Hi, Leah, and hi, everybody. This will be short because Leah will give me the stink eye at about the 30-minute mark, but I don't think we're going to make it that far. I just wanted to clarify some things about Head and Shoulders and look at Bitcoin prices and has anything changed and what about all the shorts compared to the longs and all this sort of stuff. So with that, let's get right into it. I'm just going to do a quick screen share. We'll look at our basic charts, and we will start with this one, which is the entire hyperwave that the longer it's taking for this 7th phase tail to run, the more natural this looks as a hyperwave to me, meaning very long, drawn out 7th phase after the break. And you've heard everybody say it, but it needs to be said again that what we're looking at are highs below highs, highs below highs, highs below highs, highs below highs. That's very, very important. I do agree that it's also important to have this line right through here showing support. Very important. Not as important as the highs below highs in terms of hyperwave. It's also traditionally true, but I'm just talking about those of you that have been following the analysis of hyperwaves, that I consider this action to be the most important, which also means, as I said in our last video with Tone, that if we were able to take out these highs and get up to 8,500, that changes the picture for me. It does not necessarily turn it bullish, but it changes the picture. And I don't expect it to happen. I don't think there's very much of a chance for it to happen, but it could, and that's significantly lower than what I've been talking about before, which is up around the 12,000 level, before I would feel very confident that the bear market is over. Now, I'm not saying that above 8,500 the bear market is over, but I will begin looking very carefully for signs that this action, these lows, are telling us something very significant. My full expectation is that we are very close to a breakdown below those lows in the 6,000 region from 5,800 to 6,200. That block is very similar to the block that I identified earlier, up between 10,100 and 11,750. We haven't even been close to that region for months and months, and therefore I haven't talked about it, but it's still there. And it did repel this move up at the 10,000 level, and it caused a double top at this level, and we didn't even get close this time. So to me, the momentum in terms of trying to get back up to that 10-11 area is diminishing, which is very, very bearish. But this long trend line starting at the beginning, before we ran up to 20,000, through this consolidation and holding it again, which was also the phase 3 line, holding it, and then breaking the phase 3 line, but holding the horizontal line, and then holding it again and again and again and again. Remember, the phase 3 trend line, if you go back into previous vlogs, was bounced off of 11 times before it broke down. This one is getting close to those kind of numbers, but it has not broken down. There's a big difference between a phase line that is angular and a horizontal support line, which is what we're talking about here. We're talking about a horizontal support, just as we were at 11,100 and 10,100, horizontal lines that run to infinity. And if we ever get back up to them, we'll still offer some resistance. Just as this line is offering support, but as soon as we get below it in a significant way, which once again, I believe is imminent, meaning sooner than any of the bulls would like, and probably longer than any of the bears can stand. But in any case, it's coming. And once we're below that line, it will be very major overhead resistance for a number of weeks and months, and possibly well into next year. Okay, so that's the overall big picture. You've heard me say it 100 times. Those of you that kind of agree with me or think it's a possibility, just saying it again. And for all those that don't, I'm sorry, but nothing has changed. Okay, now let's talk about where the big picture is in terms of the various things that I like to look at on a weekly basis. And we will start with the stop and reverse points. It is significant to me that we broke above this downtrend. And I said that at the time. I said, this is bullish action on the part of Bitcoin, being able to get above those stop and reverse points. But I did point back to this occasion where just the opposite happened, where the uptrend was broken briefly, and this occasion where the uptrend was broken briefly, but then reinstated fairly quickly. That's what happened here, but it took 4 weeks to do it. And during these 4-week periods where the stop and reverse was giving support to the bullish case, they ended 2 weeks ago, a week and a half ago, and now we're back into the bear case again. So the stop and reverse is still negative. We can look at other time periods, and I'm just going to do that for a moment because it's good to get a perspective. This is the 3-day negative. The 1-day is positive because of the spikes that we have had on these big tails, which is one of the reasons I have been talking about on a daily basis, this, what I consider to be a head and shoulders, and we're going to take a look at that in some detail. And I want to give you a broader understanding of head and shoulders because they come in all forms. And those forms, when you take all of the possibilities, represent a bell curve of statistical knowledge about Head and Shoulders. You can have a Head and Shoulders. Well, I'll get into that in a moment. In any case, the daily has been positive now for about 8 or 10 days, and it's going to take a move down to 6,000 to bring the daily into the negative category again. So that's important to keep noting. So we go shorter, and the 12-hour is still positive. The 6-hour is still positive. After going briefly negative for 4 trading sessions, it's now been briefly positive for 4 trading sessions. The 4-hour is still positive on this big spike up that went to 6,900, and that's why everybody, a lot of people were saying, oh, so the Head and Shoulders has been broken. I don't believe that it has, and I will explain why in just a second. The 2-hour and, of course, all the shorter time frames are still in the positive range. You can see that the very short term is, after that big spike, we have not followed through. And now we've been going sideways ever since last night. And now we are ready for the very short term to break down again. And we will see if that's a short term or it isn't a short term. And just to double check that, you can look at the 15-minute, which has repeatedly been broken ever since this big spike, back and forth, back and forth. That's what happens with short-term time frames when price is going soft. So one way of evaluating this kind of activity is, we know that the long term is short, meaning bearish. The 3-day is bearish. The 1-day is positive. So the longer term is still bearish according to the stop and reverse, and the shorter terms are positive, but now the very shortest term are ready to start going the other way again, which will then go from the 15-minute to the 30-minute to the 1 hour to the 2 hours, which is what I assume is going to happen. But that's an assumption. You let it play out and you make your decisions in real time. You don't draw decisions because of the most recent history. Okay, we'll get rid of that and we'll go to the Bollinger Band. You heard Tone talk about it. On the weekly basis, it's as negative as it can get because you've attempted and for a short period of time did make it back halfway through the middle, and you even closed above it, but then immediately reversed and closed below it and then dropped well below it, and now we're struggling to get back up to it. That number is around 7,500, about 900 points away from where we are right now, only 600 points away from that spike peak that we had last night at 6,900. But back into bearish territory and waiting for it to break down below the 5,100, 5,200, which is also my phase 2 line. Okay. And the moving averages, once again, I want to take off the price and just look at Consensio. The long term is moving down. The intermediate term has flattened and gone up and now flattened again. And the short term is back below the intermediate term. That is negative. It's the definition of a bear market, and is not a complete bear market until the intermediate term actually turns down. It looks like it has, but it to me is just flat at this point. It needs to begin moving down. It will not do that until the short term really begins to break back down to 6,500, 6,400, 6,300, which is what I expect that we will see. Okay, so let's get rid of that. And let's look at the RSI, because some people have been asking about the RSI relative to what I believe is head and shoulders on the daily chart. And I see nothing on the weekly RSI other than what I've talked about before, which is we need to get oversold, and we're not, and we haven't, but we will. The daily did get oversold barely, and now is back to the 50% mark. But because it's at the 50% mark, that means it's got to fall 20 full percentage points from 50 down to 30 to make up for the fact that it was overbought over here. And I believe that will also happen. Back to the weekly and quickly on the MACD, still refuses to give us positive, even with that big pop-up last night. We're still in a flat zone, just waiting to break out either up or down from these patterns. What I've just gone through tells me we're going to break down. All right, let me take a look at this chart, and I'm going to remove the MACDs for now and just look at, I will blow this up a little bit, because this is the head and shoulders that I tweeted about a couple of days ago. When I did that, this was my interpretation of the right shoulder. This is a clear left shoulder coming from this lower line up to the top line and back down to the lower line. And there were some comments, correct comments, saying that's a mighty weak looking right shoulder. Absolutely it is. Well, it's just getting a little bit stronger. That's what this is to me. Now, I said that 6,800 approximately to me would be the top of this shoulder, and therefore a break back above 6,800 would negate this pattern with this head, this shoulder, and this shoulder. But on paper, that happened because we had this wick go above 6,800 up to 6,900. But then look what happened. It caved in and now is at 6,652. So to me, this is still alive and well. And depending on what happens over the next 2 or 3 or 4 days, if we get back up to the 6,800 slowly or quickly and then roll back over, now you've got a very nice looking inverted, or a cup and handle, inverted cup and handle, and also a head and shoulders, and a break below this line, which I approximate to be the neckline. None of this stuff is, you know, down to the digit. It's close, but this line at 6,100 shows support on all of the candles that have come down and through it and then closed above it. And back over here, all of these candles at the 6,100, either above or below that as the beginning of the left shoulder. Now, I just wanted to give you this is not a perfect head and shoulders. It's getting there because of this big spike, because now if we get 2 or 3 or 4 days where we're playing around the 6,800 level, then we've got two shoulders that are very similar. This one's getting long in the tooth relative to this one, but none of them are perfect except when you just draw it freehand. In fact, when I said that head and shoulders tend to follow a bell curve, what I meant by that was the perfect head and shoulders ends up in the middle of the bell, where the greatest number of them will congregate. What do I mean by the best ones will congregate? I mean the ones that are the most perfect, with shoulders about at the same height, going for the same length of time, volume characteristics on the shoulders falling into the perfect pattern, which tends to be the left shoulder having higher volume, lower at the head, even lower on the right shoulder. Some people interpret it that the right shoulder, if the volume starts going up but then rolls over, is actually more negative because it shows that volume came in trying to break above the shoulders and couldn't do it. As you start looking at various aspects, the rounding of the head, that this is a misshapen head because the first two candles are higher than the, all of those kind of little details may or may not affect what happens. But as you get weirder and weirder, such as you don't have horizontal lines at the top and the bottom of the shoulders, but you've got an angular shoulder. In other words, this one higher and the bottom of the shoulder higher than this shoulder. So the only way to connect it is with an angular line. That does not invalidate the head and shoulders. It simply puts it out statistically either to the right or the left of the center of the bell curve. It's not out at the tails, although very often you'll get something like this sort of a shoulder, a head right in here. It's got to be higher than the shoulders, but it might be way down in here, and then another shoulder that's kind of funky. That does not invalidate the pattern. This is a perfectly good pattern as it sits right now. Perfectly good. It's not in the center of the bell curve, but it's not far from the mid 25% of the bell curve, the mid 25%. It's nowhere near the tails at all. Perfectly valid and still valid. Now, if we run up to 7,000 and we close and we take a couple of days up here, invalidate it, but I'll stop talking about it because other things are then happening in terms of this line, which is an important line at the 6,800 approximate level. Not only is it the top of this shoulder and now the top of this shoulder, but it also showed support coming down on these candles, got this one to mess around and then finally collapse. But also back here, it did the same thing. Also back here, it did the same thing. Also all the way back here, it did the same thing. So these two lines, what I call the 10,100 to 11,100 is the Valley of Death from the Tennyson poem. In this case, these two lines are very important. And right now they are describing a head and shoulders with a massive head and fairly large shoulders. And the one that was kind of wiggly and squiggly and funky is now getting to look more like the left shoulder. So in any case, I still believe that if we break sharply below 6,100 on a closing basis, we have triggered a head and shoulders top. And I'll talk about tops in just a second, tops and bottoms, because there's been some discussion on Twitter and other places about that. We're talking about a top here. But if we drop below 6,000 in a big way, and I would like to see us take out the lows at 57.74 before I start jumping up and down. I'm just afraid that I won't have time to jump up and down because below 6,000, my target off of this is 4,000 approximately. Why? Because basically we've got the neckline at, we'll call it 6,100, and we've got the head at 8,500. But because this is a bizarre head, I would look at it more like in this area, let's call it 8,200. And that gives me a 4,000 plus target to the downside, 2,000 to 2,400 points. in terms of the distance between the head, the top of the head, and the neckline. And you know what 4,000 means. It means all kinds of things to tone vase, to hyperwave, to the 4,800 Fibonacci line, and on and on and on. And we won't talk about that today. But anyway, I wanted just to give you my reading of that. If we had a head and shoulders top here, which we sort of tried to do in a larger fashion than this one, that to me would be a top. Why would it be a top? Because this is a top. Because we had just come up from 6,000 all the way up to 10,000. That's why it's a top. In this case, if we had formed a head and shoulders, that to me is a top, because we had just run from 6,000 up to 12,000, 11,700. So just the fact that we are low relative to where we were in December does not mean that this formation isn't forming a top, nor would this, nor would this. And if this had been a head and shoulders top, then the same thing would be true there. So I'm just giving you a more expansive definition of head and shoulders. Now, other people are saying, well, it's usually a reversal pattern, not a continuation pattern. That would be true. If this was an inverted head and shoulders, we'd be looking for a reversal pattern to the upside. It is not. It is a regular head and shoulders. So it's a top, and we're looking for a break of the neckline to take us down to here, 4,000. Okay. So that was my...
Hey, Ty?
Yeah.
So I'm taking questions today, and you have some questions on what you're saying before moving on, if that's okay.
Yeah, that's great.
Also, it is interesting at what price it has you at Bitstamp, because some are having it at 6,668, but interesting. Okay.
Oh, 6426 as we're speaking. 6403, 6400. They heard me. Anyway, let's take a look at Bitfinex. Hello.
So the question though, Ty, is regarding volume spikes for head and shoulders. There's a conversation in your live chat that specifically the head and shoulders needs to be confirmed by volume spikes at each of the three peaks, but we don't have that.
That's not true.
Please.
True in a perfect hyperwave. That's why I explained about all the other stuff. Volume can be very important in a head and shoulders. Volume is not necessary in a head and shoulders. Almost all volume related head and shoulders work. In other words, when the neckline is broken, if the volume is perfect in terms of the spikes, then you've got more confidence. But it does not invalidate the pattern of a head and shoulders. If you look at 100 head and shoulders patterns, all of which are a little different, don't look at volume. Forget volume. Just look at the pattern of price. It is far more important that the pattern is correct than the volume. It is more important that volume and the pattern are correct, but it is not essential for the volume to be perfect on a head and shoulders, for the head and shoulders to act the way head and shoulders have acted ever since the 1940s, when they were first studied and delineated, and I've been watching them ever since. And volume is a big clue, but it is not the end of the story.
How can we be in a downtrend if the head and shoulders is showing a reversal of an uptrend?
What?
That's another question. Well, actually, it's a question in the live chat. Well, you keep saying we're in a downtrend, so how can this head and shoulders be showing a reversal of an uptrend?
Well, I think I just explained that. Maybe they wrote the question after I explained it, because we have just moved from 6,000 to 8,500 and then back down. Therefore, the movement is off of a top at 8,500. The previous top was 10,000. The previous top to that was 12,000. So any movement down from there is still in a downtrend from December, but coming off of a peak, it becomes the head of another potential head and shoulders that is saying that if the neckline breaks, we will go down. Okay, I'm going to get off screen share.
Sounds good. Do you want a couple more questions before we go to?
Yeah, as many. For some reason my
yeah, it wasn't loading.
Bitcoin wisdom is freaking out. So
these are ones you don't need your chart for.
Perfect.
All right, let's have fun. I always do this with Tom, but we don't do this that often. I love it. Okay. Yeah, this is gonna be fun ones. Ready, Ty?
Yeah.
How much weight do you give the stop and reverse points in your analysis?
150 pounds. Stop and reverse points in my, that's a difficult question. They are very important, but they are very important on a long-term basis. They get less important on a short-term basis. Now, how important are they? They are exceptionally important when there's a trend change. And I'm talking about long-term trends. Whenever I talk trends, because I'm an investor talking about long-term, that's what I'm talking about. I need to clarify that each time, but I'm not talking about intraday trading trends. All movement of price, no matter what the time period is a trend. If it's going up, it's an uptrend. If it's going down, it's a downtrend. But what I'm talking about when I'm saying how important is something like a stop and reverse or hyperwave. Hyperwave is number one by far over every other technical signal I've ever seen. The problem is it almost rarely applies. That's the big problem with hyperwave. But when you have one, you have one. And when you have one, it gives you far more information than all other technical systems combined about what is going on. So the answer to the question about stop and reverse is when you have something that has been in a very big uptrend, like the phase 1, 2, 3, 4 of a hyperwave, then stop and reverse are essential, because hyperwave is not going to tell you down to the consensio level as things are turning. Is this now the top of a phase 4 that's going to end this trend and begin down for the next 5 years? That's why it's so critical, stop and reverse, because it takes a while to get out of it because of the way it's calculated. In an uptrend, the stop and reverse points get closer and closer and closer together because it is a parabolic calculation of where they're going to place the next stop and reverse point, which forces you out of an uptrend simply by staying in it. It will catch up to the trend unless the trend accelerates up away from it. So that's why it's very powerful. Once it is broken, that doesn't mean that a downtrend is starting. Other things might mean that, such as if it's in a hyperwave, it'll be clear that you're in a phase 5, because all of a sudden you're going to be down 20, 30, 40, 50% in a matter of hours or days or very short time period. And that stop and reverse point is going to be left up in the atmosphere. And it's going to take forever for the stop and reverse point to catch up with the hyperwave. That's different than a trend. What the trends we've been looking at in the stock market in the US, hyperwaves only were helpful in terms of one of them, the NASDAQ. So we had to look at all kinds of other things like stop and reverse points, consensio, sequential systems, just basic moving averages, distances above and below. All of that kind of stuff comes into play. So very, very important, stop and reverse. And almost no one uses it. I'm very glad to see that Tone is beginning to use it more and more. And it's difficult for those people that start using it not to see very quickly how valuable it is. Now, it's useless. Stop and reverse points are useless most of the time, because most of the time things aren't in big uptrends or big downtrends. They're flat, or they go up for a while, down for a while, up, and stop and who cares? So you go down to really low time periods, you know, hours or days or weeks, and then you can get in for a short-term trade on stop and reverse, out first. But I'm talking everything Leah and I have been talking about for the last 5 months has to do with long-term trends of where things are going. That's where investors place their money. As you get shorter and shorter, then you get speculators, and then you get gamblers, and then you get other people in. And that's not pejorative. That's simply a statement of fact. And you've heard Leah and I talk over and over again, long-term, long-term, long-term. I don't really care about all this noise, you know, on the chart for the last month and 2 months and up and, ooh, it's going up, or ooh, it's going down. I don't care about that stuff. I want to know where the trend is. The trend in Bitcoin is down. It's been down since December. It is down as of a second ago. And we will talk about it a week from now. And unless some very dramatic things happen, it will still be down.
No one likes that we're bears. Well, no one.
I don't like that I'm a bear for Bitcoin. You've heard, we've said it over and over again. It doesn't matter what you like. It doesn't matter what you prefer. It doesn't matter what outcome you want to happen. The only thing that matters when you take money out of your checking or savings account, cash, that does not move, except over very long time periods in terms of its buying power. It does not move. When you make the decision to put it into something, and it doesn't matter what it is, stocks, commodities, golds, or Bitcoin, the only thing you need to think about is where is the price going now? Not where you want it to go, not what a book tells you it's going to go, not what an expert says it's going to go. And how are you going to do that if you don't use proven fundamental techniques to take a look at the last minute, the last hour, the last day, the last week, the last month? That is where you get your information, not with your emotion or your beliefs or your faith or your understanding of what you think you understand about a particular asset class. The more you do this, the more humble you become in terms of anyone's ability, including yourself, including myself, to be able to predict the future. You need some very powerful tools to look at that screen between now and the next moment. But there are tools you have at your access. Now, you don't need to use them. You can use a screwdriver to try to pound a nail if you want to, or you can pick up a hammer. We are trying to teach you a number of hammers that you can use for the right nail, and a number of screws that you can use a screwdriver on. And you need to match them up asset by asset. When you make the decision to take money out of your bank account that presumably you've worked hard for, or if you inherited your father and mother worked hard for, and place it into something that moves up and down.
Trend is your friend and hope is not an investment strategy?
Precisely.
Okay. Can technical analysis predict a reversal, or can it only tell you the price has reversed after it has accrued?
Great question, and it's based on probability. you have to answer the question, is there anything that you know for certain? Physics tells us no, there is not. We get closer and closer to certainty in certain areas, and then all of a sudden, something else comes along. Dropping, a pencil. If I do it 10,000 times in a row, gravity says it's going to do the same thing every time. But if on the 10,001 time I do it, at that moment, a hurricane hits the house so that I drop it and it goes sideways. It doesn't go down because the force of gravity is less than the force of the wind. All of a sudden, you've got an exception to what you thought was a certainty. And everything has that uncertainty. That's the uncertainty principle in my own language. But when it comes to investments in technical analysis, most technical analysis, if it can give you a 55-45 probability, you can make a lot of money on that. But you must use it over and over and over again in the same way to pick up that spread if you know precisely what that spread is, which you never do. Everybody estimates these things, but the longer a system is being used, like the sequential, like hyperwave analysis, like consensio, the more times a head and shoulders. Look at Stock Market Logic by Norman Fosback. Read that book and get a sense of what I'm talking about in terms of the statistical probabilities of various things happening in the investment world. A 55%er is a winner over and over and over again. You make 100 trades, 55 are going to be positive, 45 are going to be negative. That's too small of a sample, say 10,000 trades. And if you've got a money management system in which you cut your trades short, in other words, you limit the size of the loss, but on the 55% of the long trades, you let them run, you're golden. There are many, many technical tools that allow you to do that. There are some that are as high as 60 and 65%. There are some that as high as 75 and 80%. And one of them is the sequential trading system. That's why people have been using it for 30 plus years. Another one happens to be the hyperwave. Another one happens to be the consensio system. I have looked at almost all trading systems for 40 years and given it that test. The ones that I use actively are the ones that to me give me the highest ratio of being right. So saying all of that, the question was, are there tools available where you don't have to wait for something to occur and then act after the fact? Yes, all of them, but you have to understand the other side of that probability, which means you need to manage your decision. You don't simply, on the break of a neckline of a head and shoulders that has a high probability of hitting its target, take all your money out of checking and savings, sell all of your stocks, and go short that particular thing. That makes no sense, because there's a probability on the other side that this is the 1 in 3 or 1 in 4 or 1 in 5 times it's not going to work. I use the example of playing cards. A 1 in 2 shot is flipping a coin. A 1 in 3 means take the ace of spades and 2 other cards and put it down, face down, mix them up, and pick a card that's not the ace of spades. And 2 out of every 3 times you'll do that. But maybe the first 8 times you do it, you get the ace of spades every time. You need to do it over and over again for those probabilities to come in line with statistics. So don't ever, no matter how great a system is, the sequential 9s, you know by watching tone that you'll get a 9 and it should go down 1 to 4 days. Well, which is it, 1 or 4? Well, sometimes it goes down 9. And Tone's the first one to admit that. That has nothing to do with the system being as wonderfully accurate as it is. It has to do with that particular time. You did not, you put too much value in what was going on. You didn't limit your loss. So what I would do on a Head and Shoulders, as nice as this one is, in my opinion, that has a great percentage above 50%, that if we drop below 6,000, it's going to go down to 4,000. What I would be doing is I would, if I was long this thing, Bitcoin, for example, I would sell it at the break of 6,000. And I would have a buy order to get back in, back above 62 or 6,300. I would limit my losses to about $200 or $300 on a $6,000 base on that trade. Now, if it turns out to start moving in your direction, just as Tone does very wisely in his sequential interpretation of the previous TD and other things, you get automatically in TD the lines that Tone shows as stop points. But then he also overrides that with his own analysis on where to put the stop to limit the loss if this particular thing that probability said should go in your way doesn't, and you step aside. But if you're married to a position, like no matter what, I'm going to be long this thing forever, or no matter what, I'm going to be short this thing forever, then you are flipping a coin, 50-50. And I hope you're very lucky, because if you make money, it wasn't because of skill. It was because of dumb luck.
Oh boy, Tyler, you're going to like this question way too much. Just letting you know. Okay. So everybody in the live chat is talking about quantum physics and its relationship to a hyperwave. So, and also you just talked about physics and uncertainty. So obviously Heisenberg, people are even bringing up Schrodinger's cat. So the question to you is, what are your thoughts on hyperwaves correlation to quantum physics?
It's a fabulous question, but since no one has any answers for quantum physics as it stands, there's more unknowns than knowns. Trying to correlate something we are just now studying a hyperwave. I've studied it for 40 years, but I've kept it to my little old self, and it's only been recently that we've got 20 or 30 people working on really analyzing that. And I think I've told people that we are starting a very major project, a 2-year project, where we're going to use machine learning and artificial intelligence to try to really get in and understand what's going on inside these things. And after that, we might have some answers, but probably not, because physics doesn't really have answers. They've got a lot of things. We talk about this among our group, the researchers on hyperwave, at 3 levels. One of them is the physical level itself. What the heck is this thing? How could this be in the 1920s, the 30s, the 40s, the 50s, right up to today, repeating itself? Where does it come from? We know why bubbles become bubbles, but this is a bubble that has a form, one that can be studied, one that you can benefit from, one that you can protect yourself from, depending on what side of the hyperwave you're on, by taking action, all kinds of things. Bubbles are behavioral, human behavioral things that are explained by greed and fear. And that's a part of this thing, but it's a very small part, I believe. There's something structural going on here that needs to be understood, that does relate to the physical universe, just like Fibonacci relates to the physical universe. The golden mean relates to real things in mathematics and real things you see in nature. And so much of technical analysis does the same thing, but people dismiss it at voodoo and charts and stuff like that. You need to get behind what the charts are saying to really start looking at the relationship between the physical universe. That all I can say about hyperwave is a hyperwave will never keep on going to infinity, because nothing in the physical universe does. Very weird things begin to happen as you become exponential or asymptotic to a line that is accelerating towards infinity in the physical universe. Everything having to do with singularities and black holes, everything having to do with the opposite side as you get smaller and smaller and keep breaking the particles down into bosons and quarks, and below that into things that have no mass and do not occupy any space and can't be found unless something else occurs, and that pair up into this quantum relationship with something else that could be anywhere in the universe. All of that is things that happen as you approach the ultimate largeness or smallness of the physical universe. Well, why is it that we are so reluctant in things like finance and technical analysis, which is the mathematics of finance, to see things repeated that we see in the physical universe? So anyone that is thinking in those terms that brought up that question, unless it was somebody that comes from our group, because they know we like to all think about that, the why of these things, please join our group. Because if you're asking that question after simply observing and doing your own research, you're coming to, I believe, higher levels of understanding of what this hyperwave thing is all about.
What happens if an ETF is rejected or delayed? Most importantly, if delayed.
You mean when it's delayed?
Yeah.
I will be shocked if it's not delayed. If it is delayed, if any of them are approved before next March, I will be very, very surprised. If this one is approved in the very near term, I think we'll get a pop out of it, but it in no way fundamentally changes anything in terms of the trend of the market. Unless it can get over 8,500, that's step one. Unless we can get over the 10,000 to 11, or let's call it 12,000, that's number two. And then finally, if we can get over the ultimate high at 3, I think the probability of us being able to do the first thing on a news item like an ETF is tiny. I'll say less than 10%. If we can get over 8,500, then the probability of getting over the 10,000 to 11,000 becomes very large. Not 50%, but 35, 40%, we're going to get over 10, 11. That tells me I will start taking positions for clients. Over 12,000 increases the probability in my mind of going to all new time highs well above 50%, probably closer to 70 or 75%. I don't see, if we get over 12,000, that we almost certainly, probability wise, 75, 80% will go above 20,000 and keep on going. So to me, things like, what does somebody say, what does a whale say, or how they spend their money on a spike, or what happens in terms of an exchange, or what happens if Goldman Sachs enters, or what happens if the CME or the CBOE enter, or what happens if what happens if a new ETF comes along that is structured in such a way is it will be devastating to GBTC. It will not affect Bitcoin. It will not affect the crypto market. In terms of changing trend, we could, somebody could set off some fireworks for a number of days or even weeks. But ultimately, everything I've just said about what a trend is and where this one is going is intact regardless of news items.
Perfect that you mentioned GBTC.
Yeah.
So curious as to your thoughts on the impact of the Swedish ETN. The ticker is CXBTF.
Right.
But just this is more like just theoretical.
Yeah. Right.
So curious as to your thoughts on the impact of the ETN on GBTC and vice versa, given it's an ETN on an ETF like GBTC, and there doesn't seem to be much competition in general. What do you think the impact is?
Well, I haven't looked at that yet. It just seems squirrely to me. It's a Swedish ETN, but we can buy it here in the United States. I'm not sure what that means. Somebody needs to explain it to me. I'll take a look at it because I am curious. One thing I can say about it, it's not competing against GBTC because GBTC hasn't changed at all in terms of its premium over the price of Bitcoin. If an ETF comes out and exchange traded product, exchange traded node, exchange, none of that matters. The only thing that matters is the construction of the particular product, what it allows you to do and doesn't allow you to do. And the names ETF, ETN don't tell you anything. What does tell you something is the construction. The construction of GBTC is very similar to a closed-end fund that can trade above or below the underlying value or the intrinsic value of what it's holding. And there are hundreds and hundreds and hundreds of closed-end funds that do that. They're not ET anything. They're called closed-end funds. Under like an open-end fund's a mutual fund, a closed-end funds trade just the way I described it. And some of them will go up to 50%, 100% above the value of the intrinsic value of those closed-end funds. And some will drop down 30, 40, 50, 60% below it. You can buy them at a 60% discount to what is owned. That's the kind of thing Warren Buffett does all the time with stocks. He buys companies when their book value or intrinsic value is as low as it can possibly be, and he loves to buy things below book value. That's all we're talking about here. This one thing called GBTC, you can do that because it is constructed in such a way that it can trade above or below, and it has on rare occasions actually traded below. It will on other occasions trade below intrinsic value. If an ETF is approved later this week or next week, that only moves exactly with the price of Bitcoin. If it does that, GBTC's premium will quickly go very close to zero, in my opinion. The fact that the Swedish one has been out and people can supposedly trade it and GBTC is unaffected means that something weird is going on with that Swedish thing, and I will take a look at it. But it is not in competition, whereas an ETF would be. Now, if an ETF comes out and is approved that is similar to GBTC, but there's something structural about it that limits the amount of a premium, and I can think of 2 or 3 or 4 ways of doing that. I don't know if how this one is constructed. I'll wait till it's approved, which I don't believe it's going to be approved. But if it is, then I'll take a look at the construction and then I'll watch it. I don't care what the papers say. I will see how the market reacts to it and what it actually does, which is what I did with GBTC. I took months of watching it before I put a penny in it. And luckily the timing was perfect and we did very well with it. And the clients did very well with it. Okay. So that's my take on that.
All right, let's take, I think, one more question, given timing. When there's a short squeeze, and I assume the pump from yesterday was that, shouldn't this be ignored in the whole pattern because it's kind of an anomaly?
If you mean in the pattern of a head and shoulders, no. It doesn't matter if something is anomalous, if it came from a news item or if it came from one big spike because of short covering or one big sale because of a big whale dumping something, or that becomes part of the pattern. You've got, and something that's part of a pattern's got to be considered, regardless of what got it there. What's great about patterns is that they tend to be self-policing, or they disappear. They're no longer a pattern. They fall apart. This one, we had this wild spike up, and right to the point that I thought, oh my gosh, it's going to break through the pattern. It didn't. The pattern protected itself from this extraneous event that was a short squeeze. That's the way I would interpret it. Now, if it had kept on going, or if it does it tomorrow, the next day, or the next day, then it's not just a short squeeze. Something else is going on. It's continuing. And the short squeeze we've seen over the last number of months have been one-day events, basically. Sometimes those one-day events have resulted in sideways patterns going for a number of days after that, and then continuing up with another short squeeze. That's different. That wasn't the original short squeeze. So then that becomes part of the pattern.
All right, Ty, what do you think?
Yeah, I think that's enough for questions. Did you want to try to bring up the
alts,
or do we want to do that later? We can do that later because what we're going to do is just look at the altcoins. The altcoins are bouncing. They're bouncing more than Bitcoin has bounced in this bounce up because they had gone down more than Bitcoin had gone down, and they are going to go down again more than Bitcoin, and they are in very, very severe downtrends. There's Ethereum. There is Ethereum dollar weekly. And here is Bitcoin Cash.
You want daily?
Yeah, take a look at daily because we're getting little pops in the last. There we got a day-long pop and then back down again. So Bitcoin is the king. Bitcoin, all of the other alts have the potential to go up more than Bitcoin in a bull market and go down more in a bear market. We've been in a bear market since December. Therefore, all of them are going down more than Bitcoin. I believe Bitcoin's still going down, and therefore I believe all of these, no matter what the name is or the symbol is, are going down more than Bitcoin.
All right. Yes, we're Bitcoin maximalists. All right, everybody, thank you so much for watching. Ty, that was awesome. Guys, I grabbed everything. I also really appreciate your comments on conversation points for Safedine on Friday.
Oh, yeah. One other thing. Sorry to jump back in. Yeah, I think it's going to be very interesting on Friday. To prepare for that, if you have not read the Bitcoin Standard, please do, particularly the last 4 chapters. The history is fascinating. I spent a lot of time on the history, but the last 4 chapters or so are Bitcoin, Bitcoin, Bitcoin. And that's what we're going to talk about on Friday because of the statement that he said that if we go back to a gold standard, it could kill Bitcoin. And I want to get into that in a lot of depth. It was just a throwaway, and I might be misquoted him, and I don't mean to do that. So I want to give him plenty of time to, and I'm going to take plenty of time. The other thing, if you haven't read it and you'd like to really understand what we're going to try to talk about on Friday, is the book by called The Battle of Bretton Woods by Ben
Steele,
S-T-E-I-L or I-E-L?
E-I-L and B-E-N-N.
B-E-N-N. And it was written in 2013. I'm rereading it again for Friday because that's the guts of what we're going to talk about, is that gold standard from 1944 in Bretton Woods, what broke it in 1971, and what it will take to bring it back. And if it is brought back, is Saifedean correct in saying it could kill Bitcoin? I believe that it could. And I believe one of the so I believe that it could, but he said that it will. And I'd like to understand that better. The second thing I just wanted to say is one more quick advertisement. Sorry keeping you all on. I've said this in 2 other vlogs. Leah and I started just about a month and a half ago, working with consulting clients. We don't advertise, anything about our vlogs in terms of trying to monetize them, but an awful lot of people started getting very interested in the perspective that we're trying to bring to the investment market as well as the crypto market, and the marriage of those 2 things, in terms of working with us on a one-to-one basis, in terms of giving advice, which I cannot do and do not do publicly, but on a one-on-one basis where we can get to know you and you can get to know us, how we think, what kind of information we can give you. We do have this consulting arrangement, and we are going to be ending it, except for the people that are already in it, because quite frankly, we're sort of overwhelmed with the number of requests. We don't have a set number, but if you would like to talk to us about that on a one-on-one kind of basis, please go to our website, lucidfunds.com, and there's a form there where you can just fill out some basic things, asking questions about what, how, why do we do it, and also any comments that you have, you can write them in there in terms of us expanding our small group type of seminars, either electronically or in person at various locations, in terms of the topics that you would like covered. Almost everybody's saying we'd like to learn Hyperwave in much more detail, like to see more examples. How do we do it? How do you draw and the Consensio is getting a lot of things, but a lot of people are very interested in the money management aspect of some of the things we talk about. So whatever combination of those things might be of interest to you, we would love to hear from you about that. Thank you. And that ends this broadcast.
Well, last thing, first of all, to the clients that are watching, we love you guys so much. You guys are like the coolest people in the world. We kind of talk about it quite often. 2, which is actually kind of interesting, Ty, on your point regarding also Saifedean this Friday. So we are talking about Bretton Woods, and a little bit of a marriage is that when I was at the World, so obviously the World Bank was established at Bretton Woods as well in 1944, specifically the IBRD, which is the International Bank of Reconstruction and Development, but it was specifically for World War II. But when I was at the World Bank in 2010, Zolik, who was the president at the time, actually started talking about a gold standard. So not just now with Trump, but actually he was a huge proponent and tried pushing it, and everyone slapped him down, but that was back in 2010. And then lastly, for the people in the chat who said that I should have pulled up EOS, which is my favorite coin. It is the most, I don't even need to watch Netflix or a movie with this one. Yes, it's down 2.7%, and it's just hilarity to me. So everybody, thank you so much for watching. You can kind of, no, you can't see Thor, but he's sleeping, and have an amazing day. Okay, bye.
Bye-bye. Thank you.